Hello and welcome to Unleashed, the show that explores how to thrive as an independent professional. Unleashed is produced by Umbrex, which connects you with the world's top independent management consultants. I'm your host, Will Bachman, and I'm here today with Indranil Ghosh, who was in the New York office of McKinsey when I was there. We didn't do a lot of work together, but we crossed paths and knew each other, so it's great to reconnect. Indranil now is the CEO of Tiger Hill Capital, and he's also the author of Powering Prosperity, a Citizen's Guide to Shaping the 21st Century. Indranil, welcome to the show.
Well, thank you for that introduction, Will. It's great to be on the show.
So, Indranil, let's start with tell us a little bit about your background and what led you to write this book.
Sure. Well, I've had quite a diverse career, actually. I started off as a research scientist. I did my PhD in chemical engineering at MIT, and I've always, maintained that love of science and technology. And at grad school, I became interested in finance and economics, and really the commercialization of technology was something that really grabbed me, especially since there was so much of that going on at MIT and still is, of course. So when it came to join the real world, I, pursued a career in business. In the early days, it was quite a traditional path. As you mentioned, I worked at McKinsey, and I went on to work at a hedge fund, Bridgewater Associates, which is just up the road in Connecticut. But these days, I really ended up being totally focused on sustainable investing and supporting impact entrepreneurs and companies trying to pursue sustainability strategies. And I think the transformation really came about when I worked as the head of strategy at Mubadala between 2010 and 2012. And in those 3 years, it was amazing to be at an intriguing sovereign wealth fund in Abu Dhabi, whose mandate was not just to invest and make money, but to diversify the economy of that entire country away from oil and gas and into industrial and knowledge-based sectors. And the model was to do that by incubating new businesses that produced all this socioeconomic benefit. And so that's how I really got into double bottom line investing and business building. And this was at a time when, most people didn't understand what the term double bottom line meant. So I had a little bit of an advantage.
Maybe explain it to us in case I don't understand what it means.
Sure. Well, double bottom line simply means that in addition to making financial returns on a business that are equal or greater than what the market would demand, you also take great stock in trying to identify ways to add benefit to society, which could be on a number of different dimensions. It could be job creation, or high-wage job creation. It could be improving social services like healthcare and education. It could be improving the environment. So these days, a lot of people talk about this in the context of ESG. But I think double bottom line is a sort of broader context of not just an accounting system for looking at these additional benefits, but really thinking about how you're going to have impact in society and the community through business enterprise. And I think this has become a lot more mainstream now than, when I was doing it at Mubadala 10 years ago. And there's a lot of interest, I find, in terms of entrepreneurs who are thinking about building businesses that are scalable and can really tackle some of the big challenges of our time, like climate change and the inequality gap and so on. And increasingly, I think investors are coming around to try to support those businesses. And that's where, at Tiger Hill Capital, that's where we sit, trying at the interface of those types of entrepreneurs and the capital, progressive capital that wants to support them.
So, and when you do that with at Tiger Hill Capital, how do investors balance, or do they need to, those two bottom lines? So are they kind of explicitly willing to trade off a certain level of financial performance in order to achieve some social goals, or are they aspiring that they can kind of both maximize financial performance and also, in correlation with achieving social goals? How do you have those discussions with investors?
Well, 10 years ago, I think things were somewhat different from what they are now. 10 years ago, you'd often hear people talking about this trade-off, and of course they still do. But in those days, I think there were some real physical challenges, if you like. So if, for example, you have a $100 billion portfolio and you wanted to deploy that into assets which could help mitigate the effects of human-induced climate change. Well, 10 years ago, wind and solar energy, renewable energy, wasn't at grid parity. So you'd be looking around for assets which had been somehow subsidized by government to make the returns work. And similarly, if you looked in other spheres, trying to make an impact on education and healthcare, sometimes the digital technology hadn't caught up, or simply the awareness of these things so that businesses and social systems could be changed to enable new ways of doing things were much less available. So people would be, investors would be working really hard to find enough deals to make it a big enough part of their portfolio for it to make a difference to the portfolio or in terms of impact. Now, fast forward 10 years, many parts of the world, renewable energy is actually cheaper than fossil fuels, although with oil prices the way they are now, that's, changing dynamic. But, the fact is, as with many material things, the unit cost of production continues to go down for these renewable technologies, and there's, much more capital you can deploy to make a good return, as well as, having pretty large scalable impact. And over the years, I've seen that, sector after sector, there have been many more opportunities to deploy capital, whether it's in things like food production or, other industrial areas, or in social areas like education and healthcare, where you can deploy capital to do good. And by doing good, you actually improve the economics of the industry and your business. So I think, the maturity of this whole space has grown and will continue to grow to make it much less of a trade-off and much more that, just doing something sustainable makes both financial and non-financial sense.
Okay. I recently had Carolina Miranda on the show who talked about B certification. So we recently touched on that. Beyond that, are there other types of certifications that help alert you to a company that's pursuing a double bottom line strategy? Are there other formal ways for companies to, establish that as a corporate objective?
Well, I'm not really an expert on in terms of company structure in that sense, but the kind of indicators I look for are things like whether the company is able to reduce energy costs, which is usually a huge generator of carbon, or reduce the amount of material, or move to an alternative material that consumes a lot less energy, or somehow avoids the use of some sort of harmful extractive methods to get at their materials. I look at business models that can inherently be located because of what they are in less populated, densely populated urban areas, because a lot of small towns and rural areas have been depopulated over the years and deindustrialized and have been left behind. So it's quite important that we don't let them wither and die, but somehow find a way to reinvest in them, bring new businesses there, and revitalize them. Firstly, to alleviate pressure on cities, but also to rebuild these communities. So there are a lot of metrics like this that, I think as a good impact investor, you can look for to identify businesses that, really move the needle financially and in terms of societal benefit.
So let's turn to your book. So Powering Prosperity, what are some of the ways that you talk about on how citizens can shape the 21st century?
Sure. Just a quick word on how I came about writing this book. So it's been a long time in the making and the formulation. Probably goes back to my time at Bridgewater when I first started looking at some long-term macro and mega trends and began to realize that we were going to go through a big economic transition, and we were going to come to a fork in the road, a crossroads in history, if you like. And, I think that transition is really on us. It's over the next 30 years, the world will become aged, lower carbon, and an AI augmented industry. China and India will be new superpowers. And we're going to see a lot more of these, disease outbreaks and climate change events, systemic risk that causes disruptions. Now, the problem in dealing with all of this is that if the working age population is dwindling, at least in most developed countries, therefore the tax base, gets smaller, and it's really difficult for governments to continue to fund the kind of social security liabilities that we've become used to, as well as taking care of these myriad of crisis response provisions that they'll need to put in. And, at the same time, jobs are under threat from automation and economic shocks and foreign competition. And somehow we have to invest in, transforming this sort of carbon-intensive production model to something that's lower carbon. Now, that involves a huge amount of sustainable development investments, which is, I can go through the numbers a bit later, but it's way beyond, what public investment or public expenditure can afford. It means that there needs to be a change in the social contract and some of our key institutions to make sure we're a lot more inclusive to all parts of society and enable more people to go to work and participate in the benefits of an economy. And we have to empower local communities to thrive in a globally connected world and not just get sort of leached out by uncontrolled economy. And so I think what citizens can do, in their different roles in society is realize, how much power they actually have, whether it's as a voter, as a school principal, as if you happen to be in public office, or as a business executive or an investor. There are lots of choices you can make in terms of what you spend your money on, who you vote for, how you invest, and what kind of companies and projects you support, and what you do in your local community that can make a huge difference in whether, we go down a more progressive fork in the path and, become a more sustainable society, or we continue to lurch from crisis to crisis and just remain in denial. So the book is really, about laying out, the framework for this and how you can think about some of the challenges ahead and what you can do about it.
Okay. Give us some examples. I think we can kind of intuitively, understand voting. You can vote for, maybe politicians that are going to have a more environmentally respectful, kind of agenda, environmentally focused agenda. In terms of spending, we can choose to, focus on more environmentally friendly products. Maybe not travel so much, or get carbon offsets when we fly. But talk through some of the maybe less obvious choices that we can make that can help shape the 21st century.
Sure. So I think one of the big realizations I had when I was researching the book is that if you look at the real cost of things over the last 30 years or so, manufactured goods like electronics and cars in real terms have gotten much cheaper. So many more people can afford them. But actually, social services like the cost of housing, education, healthcare, childcare, elderly care, this has all gone up quite dramatically. So fewer people can actually afford that, particularly in dense, urban, expensive places. So I think this is the observation that stuff has got cheaper, but life has gotten more expensive. And so when you hear, the refrain of the millennial generation, for example, that life isn't as good as it was for their parents. This is, a generation that's saying the opposite of what was said before, which is every generation things get better. And I think this is a big driver of that. Now, what can we do about this? Well, the reason why, many of these things have gotten more expensive is, let's take housing, for example. A large part of it is to do with zoning. So not in my backyard. The lack of transport infrastructure, for example, that might allow people who live, in a nearby town, which let's say is 20, 30 miles away, because of the lack of public or rapid infrastructure, transport infrastructure, they can't get to work. This tends to, increase the cost of housing, particularly in densely populated areas, and prices out segments of the community who have to move out, and it's harder and harder for them to find the jobs that actually do exist, right? So in terms of zoning and supporting and investing in public transport infrastructure in particular, there's a lot we can do in terms of influencing our politicians and also thinking a bit outside of our own selfish interests in terms of, maybe allowing that development to go up, in our neighborhood that can, create a lot more housing for people who need to be there. Similarly, when you think about the education and the healthcare system, the education system particularly, I mean, it's really not changed much since the 19th, the 19th or even the early 20th century. It's basically still mostly a model of absorbing knowledge and regurgitating it, and doesn't really lead to, job-ready people. And if we're living in a world where, for a period anyway, there are going to be a lot more elderly people, and so the number of working-age tax-paying people is lower, then people need to start being productive earlier and work longer. Now, this requires, new business models or new models of education that can get you job-ready much earlier and without debt, so that you can get ahead in the economic ladder sooner. It requires probably sort of a public-private form of Social Security where you can save in some sort of a life account and have contributions from government and your employer to top that up and be able to withdraw from that account so that you can fund retraining and relocation to jobs which you'll have to do several times in your career. And it involves probably having a larger savings pool for your retirement, which could have been helped by having, more of a organized and mandatory savings requirements for retirement, which is what many countries like Denmark and Australia do very successfully. So in terms of, the financial industry working with government to make these types of financial products available, in terms of businesses coming up with better educational models, there's a lot of things that we can do just in this one area to really unlock some of the problems that we're going to face otherwise, in terms of, basically just running out of money to provide the social services people need to be able to go to work.
Yeah, that's kind of a grim picture. What are some of the changes in key institutions? You mentioned earlier that we're going to have to see some changes in key institutions. Say a bit more about that.
Well, just talk about a couple. I mean, if you look from the 1970s, when Milton Friedman started talking about shareholder primacy, prior to that, there wasn't really an obsession with the shareholder as the only stakeholder in the company, and maximizing returns to that one stakeholder is what business is all about. There was much more of a balanced approach to thinking about workers and other stakeholders. And in countries like Germany, that's probably remained the case to a large extent over the years. But, the sole focus on shareholder primacy has, I think, taken the eye off the ball of the longer term investments and the bigger corporate responsibilities that exist towards the welfare of workers, the responsibility to building up communities, longer term investments in R&D, which may be done through investments in local universities and colleges, which then help to create more young businesses coming out of those universities, help to attract younger people, help that community. I mean, there are whole cycles of positive virtuous cycles that the right corporate actions can kick off if there's a greater awareness and understanding that then these benefits of society come back to help the economy as a whole, but also help the company itself in terms of, giving it a larger pool of talent to draw upon, or richer wealthier consumers to buy their products. So I think one of the institutions that we really need to look at is corporate governance, and what does a modern stakeholder approach to corporate governance look like? And of course, we saw some of the thinking around that from Elizabeth Warren, which perhaps was a little too bureaucratic, but at least was beginning to open the dialogue on that side of things in the U.S. Another important institution is antitrust. Okay, so arguably, we've gotten, not arguably, definitely, most industries have gotten much more concentrated at the top, with the bigger companies having larger market share and probably an even larger proportion of the profit pool in the industry. To the point where in some industries like tech, I mean, it's hard to argue sometimes that there isn't significant market power held by the top players. And yet, there's practically nothing that's been done in the U.S. anyway, a little bit more in Europe, to challenge that. And unchallenged, what that means is that profits from these larger corporations in particular tend to go to disproportionately to the shareholders, the asset owners, and top executive management, and less to workers. And lo and behold, we've seen over the last 20 or 30 years, the proportion of profits going to workers declining steadily, and the proportion of profits to asset owners increasing. And this is one of the reasons that has led to a growing inequality divide in economies like the U.S. So that's another example of an institution that needs to be looked at again.
Okay. Tell me a little bit about the coronavirus pandemic and what you see as either the opportunities or the challenges it poses to powering prosperity.
Well, I think it really, in some ways, brings a lot of these issues to a head. All the challenges that I've discussed and many more have been simmering for some time now. And, you've seen a lot of protests around the world, whether it's because of protests for democracy or protests for economic justice, protests for, better respect to the environment, lots of different protests, which is just, and it's been escalating over the last 3 or 4 years, which is a sign that people are discontent with the system. And, certainly there's a lot of challenges that have really been simmering. But the problem is when you look at, at least democratic societies, leadership, political leadership tends to have a 4, 5, 6-year cycle. And so there's really not much incentive to tackle these challenges in a very aggressive way, and it's very easy to kick the can down the road, unless those challenges come and really hit you in the face, and there's no option but to address them. And this is why I think when you look back in history, some of the biggest changes, whether it's technological or, more importantly, perhaps even social changes, have been accompanied, have come on the heels of, huge crises. So things like universal suffrage or women's, entry into the labor force. These all followed big crises like the World Wars, because there was no other option to give universal suffrage to all the people who'd gone and fought in the First World War and died for the country. And when, women went to work in much greater numbers in the Second World War, well, that was hardly going to be rolled back, especially when they proved they were equal, to their male counterparts. And so, in this crisis, I think, we will face some of these challenges because it's quite a big crisis. Let's not be under any illusion about that. It's quite a big crisis, and many of these issues will come to a head, and it will be an opportunity for great innovation, particularly from the private sector, but also the public sector, to try to address these issues once and for all. But of course, as with anything, you need public support and you need good leadership to make the right choices. So we'll see how that works out, particularly in the U.S. with the upcoming elections.
For a reader of your book, what are the one or two or handfuls of kind of really key points that you hope would stick with someone, and maybe actions that they would do?
Well, I think one of the biggest concepts in the book is that you can't rely on the public sector to do everything, and the private sector is kind of unempowered without the right measures taken by the public sector. So it's really a partnership. I'll give you one example of that. So I think everybody has heard about the 17 Sustainable Development Goals now. And one of the interesting questions is, well, how much is it going to cost to drive forward all these 17 goals to the levels required? And the estimates by the UN have been on the order of $2.5 trillion per year for at least the next decade. That's the funding gap. That's not the total amount of investment required. But if you look at what's already budgeted in government budgets, the gap is $2.5 trillion a year. Now, in my book, I actually make some back-of-the-envelope calculations, and I think it's actually much bigger than that. It's probably at least double that, $5 trillion a year, because these calculations don't take into account the additional child care we'll need and the housing and a few other things that are really not fully accounted for, in my opinion. So let's say it's $5 trillion a year of funding gap you need for at least the next 10 or 20 years. Well, the global tax base is only $25 trillion a year. So to fill that funding gap, you need to increase taxes across the board by 20% globally. Now, clearly, that's not going to happen, especially now that we've experienced this economic crisis. So, where's the solution to that? Well, the only other number that's anywhere close to being big enough to address this challenge is private wealth, not public wealth, because public wealth is actually surprisingly small. Public stores of wealth are probably only in the order of a few tens of trillions if you take sovereign wealth funds and a few other pots of public money lying around. But private wealth globally is in excess of 200 trillion.
What?
And
holy smokes!
At least
wow, 200 trillion.
200 trillion.
Wow, a lot of money.
It's a staggering number, right? Especially when you put it in the context of some of these other numbers I'm talking about. And global consumption is 55 trillion a year out of the $80 trillion of GDP. So, simply put, if you start diverting a relatively small proportion of your spending, your consumption, and you start diverting, again, a relatively small portion of private wealth to the sustainable development type of investments and more intelligent, sustainable corporate behavior. If you insist on that as a consumer, as an investor, and if you, let's say you're, part of in charge of a large asset management firm or institutional investor, if you take these capital shifts seriously, this is really the only way to address these sustainable development investment requirements. Right? So it has to be a partnership between the private sector and the public sector. And the public sector, of course, is incredibly important because it's going to set the incentives and the regulations to make those flows of capital much more attractive financially. So you're not just relying on goodwill and awareness, but you're making it financially attractive for flows of capital to go into sustainable things through making sure that you're pricing carbon properly through a carbon tax. So you're channeling money into negative carbon in industry and infrastructure, for example. That you're maybe giving tax incentives for employers who provide training and retraining to their employees. So it's more advantageous to do that on the P&L statement. So there's a lot that the public sector can do. There's a lot that they can do in terms of seeding and structuring infrastructure investments in particular, and a lot of other areas like innovation, seeding funds to help with smaller companies get off the ground. that can then crowd in the private investment to make this all work. So I think that's one of the big takeaways from the book. And then I think, practically, I think, you really need to think about your life as a portfolio of roles in society that you have, because we all have different roles in society. We might be a CEO, we might be a father, we might sit on the board of a nonprofit, we might sit on a school board. There are so many, roles we have in society where we really need to understand how much power and influence we really have, and ask ourselves the question, are we really doing enough with those opportunities? Because if you can really have an impact as a school principal in the way you are preparing youth to be not just good students, but good citizens and really productive, critical thinkers and problem solvers that are aggressively going out and, changing the world, you're going to have an enormous multiplicative effect on society over your career. And if you think about the same thing with all the different roles you have in your life, as a parent, as a CEO, as an investor, these choices make a big difference, and these choices make an even bigger difference when they happen at scale. And then when you talk about this with your colleagues and your friends, and you do your part to change awareness and attitudes.
Fantastic. Any parting thoughts for us, Indranil? Any other takeaways?
Well, I think one takeaway is technology is a great thing, and it is a big enabler of a lot of the kinds of changes we're envisioning. But by itself, it's neutral. It's all about how we use technology. So I think it's very important to be cognizant of that and be thinking about how to use technology with the right outcomes in mind, and trying to anticipate as much as possible some of the negative second and third order effects that somehow come along with new technologies, and modifying the approach quickly. But I think digital technologies have the potential to be a great leveler, because if people in the remotest, least developed parts of the world can now get on the internet and basically have access to infinite knowledge, and increasingly have access to financial products, and have access to a lot of other things, I think the future is really bright in terms of what digital technologies can do. But they can also be used for digital repression by the wrong sorts of governments, and they can create stress if you're looking at a computer screen for too long. So we have to, I think, really make the most of the technology that we have. And I'm not just talking about digital, that's one, but all of the different technologies that are coming through. But we have to really look at them through an ethical and philosophical lens to make sure that we're making good choices as society as to how to use them in the right way. So I think that's one other parting thought that's explored in the book, and is an important one for us to all think about.
So, Indranil, for any listeners that wanted to learn more and follow up with you, you want to give any website or Twitter handle or best ways for people to find you online?
Sure. You can find about what we do at Tiger Hill, my firm, at tigerhillcapital.com. You can find out more about the book at powering-prosperity.com. That's powering-prosperity.com. And of course, if you're interested in these themes, please go to Amazon and you can buy the book. It's been out a week, and it's selling very well, actually. So
congratulations.
Please support the project.
All right. Indranil, hey, thanks so much for being on the show.
Thank you. Well, it's always a pleasure.